Hi, Piyush. How you doing?
Good, Julian. How are you?
I'm good, thank you. Good to see you today, Thursday, March 5th, 2026. We're going to do the usual market stat and mortgage rate forecast for the time to come. And boy, oh boy, exciting times. Not only uh, peaceful for everybody. We do have a couple of significant armed conflicts around the world, and we're going to talk about how could that impact our local residential real estate market here in Vancouver, its sales volume and pricing. So I'm going to dive in the charts, but look at this pristine aerial view of Tofino. Those sunny days, they make me think of the Tofino getaway time. So looking forward to this. All right, let's go. Okay, we're gonna go over the good old charts, reviewing supply, demand, price evolution. And right now we're looking at the total inventory for all property types in Greater Vancouver. In the past videos for our regular viewers, we've been in a steady increase, like pretty strong increase of total inventory over the past couple of years. So basically, it started to pick up September 2023. And the little news I have about this chart is that we plateaued a little bit, just a tiny bit, as opposed to just keep on going straight up. Like we plateaued a bit. So basically, the total inventory went down by a few dozens units, like a dozen unit actually. So let's see how that plays out in the coming month, because usually, February, March, April are the busy month where you see the most inventory on the market and such. So let's see how it plays in the coming month. But right now, is the plateau going to get confirmed? Is it going to increase or improve? We don't know. So still pretty high level of inventory. Okay. Then the number of sales, not good. Okay. So here is my approach to the number of sales. 2025 was the lowest sales volume, okay, for the year since 2000. So in the past 25 years, 2025 was the worst year. So I'm like, okay. 2026. So we are 2 months in 2026. In January, we have a minus 30% in terms of number of sales from January 2025. So waiting for those stats, I was like, okay, let's see if there is an increased number of sales for January. So for February, sorry. So February, the number of sales is minus 10% compared to February 2025. So meaning we are already playing catch up with 2025, meaning that 2026 so far is going to get worse than 2025. And 2025 was our worst year since 2000. So let's be clear. Okay, how is that going to play out on the price? Remember, Adam Smith, invisible hand, adjusting the price depending on supply and demand. Okay, so the price, we're looking at the home price index for Greater Vancouver. And for some reason, like it's we have different numbers all the time, like from the board and the charts and everything. But long story short, we are declining from our all-time high. Okay, we are on a
decline.
We are about 15% from the peak. Okay, here in Greater Vancouver. Ontario is about 30% from the peak. So there is a housing crisis not the one we're used to, where prices are going up, there is not enough inventory, it's expensive to buy. Like right now, there is a decline in prices. We are facing very low volume of sales. Prices are holding up the best they can, but I don't see them holding up much longer. I'm not saying they're gonna die. There's gonna be a crash. Like in Ontario, we're talking about a crash. Okay, there is a real estate market crash. Right now here in BC, in Vancouver, there is a correction. Not the same narrative. Okay, how long is there going to be a correction? Okay, it will potentially stay a correction. Okay, is it going to be a soft landing, or is it going to turn into a crash? Okay, right now we have about 5,000 empty properties, resale and pre-sale combined, in Greater Vancouver. Okay, and we have no activity in terms of people. I mean, we have very low activity in terms of people buying. Okay, why so? Well, the actual landscape is not favorable for committing to a significant purchase, such as buying real estate. Okay, conflict all over the world, potentially a third world war. On top of that, we have a double whammy here because of land claims. We touched on this matter a month ago, back in October 2025. We're now March 2026.
The Cowichan.
Sorry, Piyush?
Yeah, it was the Cowichan claim that we talked about.
Correct. So the latest one is the Musqueam in Vancouver. And it's confusing. There's a lot of confusion about the ramifications around those land claims. Even the top people at our political representation on the provincial level are confused about it. You know, because the Musqueam agreement is with the federal government.
That's where the issue lies, or the confusion lies. I should say that it seems like it's a federal government agreement with the federal government, and it has to do with a fishing and marine management agreement. I don't think, at least from my understanding, if I'm wrong, correct me, it's not to the level of the Cowichan line title, because that has been done specifically by the Supreme Court of British Columbia, and that talks to it creates this ambiguity about now what happens to the freehold title of the private properties that are owned by individuals and businesses in that area. There doesn't seem to be that issue with the Musqueam agreement with the federal government, because they specifically mention it has to do with fishing and marine, to my understanding.
Yeah, and federal land. Land.
Correct.
At the end of the day, Piyush, you know, my understanding is the following. Even though the people, again, like the people at the highest level of representation of our, of the people, political level, they are confused. You know, like Abby saying, like hard fact. The Minister of Relations so the provincial Minister of Relations with Natives, First Nations, didn't know about the agreement. Nothing.
Yeah.
They heard it from the news. Is this normal? So again, for our international viewers here in Canada, we have a federal structure, federal, provincial, municipal. Okay, they each have a scope of authority over different matters. Okay. And it happens that they just don't talk to each other, as crazy as it may sound. So the fact that the minister didn't hear anything about that agreement is not a good sign. And everything should be done in transparency. They don't know what's in the agreement. Then, the representative of the Musqueam Nation, they explain, okay, we're not going to come after your homes and stuff. Great. At the end of the day, I don't think they're going to come after people's home and stuff. It's not the problem. The problem is what? The problem is this a favorable landscape to invest for international capitals? No. is it a favorable landscape for people to feel confident about what are the new decisions that are going to be coming in the future about their investment? No. Okay. So there's going to be a certain period of time that's going to need clarification. We all wish for the best outcome ever. But certainty is lacking. Okay. So again, I just watched our economic in chief, Mr. Brendan Edmondson, which I really, really appreciate for his work, analysis about all the different influence in the market. He's confident that's going to be an increase of sales in the coming month, because we've been 3 years kind of like not much happening. Let me show you again where we've been for the past 3 years. So I can reiterate what my comment was about the ping pong ball effect. So basically here we go dive deep, then we rebound like as fast as we went down, and then same here and the same here. But here the ping pong ball is broken and doesn't bounce anymore. We have been in low volumes for a couple of years, and I don't see this level of volumes actually for 2026 to increase. Why? Because you're going to touch on that according to our quick conversation before starting this video, is the conflicts globally. Like, we are technically in a third world war, and right now the cost of oil, which Canada is a big producer of, but also impacts the interest rate, and also people expenses and disposable income at the end of the day. Once they cover all the expenses they have to, okay, so food, transportation, heating the house, all the like the energy cost. Right now we're about at $75 a barrel, okay, with a US dollar strengthening. In my opinion, and I'm watching this with as much concern as I can, and my understanding is that if we were to hit $100 plus a barrel, it's gonna be we're gonna be entering a pretty hard time on the economical level locally here in BC. It's not gonna be easy. We're not heading in happy times. So before I hand it over to you and you can comment on my understanding of the situation, I would like to finish with the chart that I introduced lately, which is the median price per square foot in Vancouver for condos, okay, which is sliding from his all-time high that was like slightly off $1,100 a square foot, and we are sliding to now be at 1,017 a foot, and I see this number being below 1,000 next month or the following month. Like, so far we've been pretty, I would say, soft about the state of the market for the past couple of months. Today I don't want to be soft. We are in a very, very tight spot. People are being hurt. People on one hand, they are selling with significant losses on their property. Some are pre-sales. It's a different story. Those were investments. Sometimes you make an investment, it works out. Sometimes it doesn't. Hey, that's how it goes. But I'm talking more about principal residents, people with regular jobs, with families that bought properties kind of 2020, and the price of their properties has been going down. Still pay mortgages on the price they bought it at. At the same time, price of everything increased, and if the conflict globally don't slow down, oil is going to go again up.
Yeah, the price of oil will push the price of everything else up.
Exactly. So, and Canadian families are some of the most indebted families in a G20. So I'm not trying to be alarmist. I'm not a doomsayer, but at the same time, I want to call it like it is. All right. So on this note, Piyush, please take it away.
Sounds good. Everybody.
Not so
So
good.
I'll take what you said further, and it ties in perfectly with what I was going to talk about. So we're going to start with the 5-year Canada bond yield. So
Okay, so I'll let you take over the
so
screen.
this is where it sits right now. So from February, we were actually seeing declining rates in the bonds, and that had pushed fixed rates down to its lowest that we've seen in a while. And end of February, beginning of March, towards the end of February, the rates were really good. And now, ever since we've had this Iran issue come up, the bond yields have spiked up. And that has now I'm starting to receive emails from lenders advising us that fixed rates will be increasing. We're seeing somewhere between 5 to 10 points in rate increases. And this purely has to do with the oil price inflation risk. And this is where I will share this screen. Right here. Oh, before I do that, give me a second.
So we're in a good spot until end of February, and these conflicts kind of
Yeah.
next level in Iran.
Yes. So
because for about a week now we've been in it.
Exactly. So this is right here. So oil price inflation risk. Rising oil prices due to Middle East conflict escalation present a potential inflation risk that could complicate the Bank of Canada's rate cutting timeline. So up until this situation that happened, we were expecting rate drop, and this has now changed the entire plan that Bank of Canada has, because the thing that you have to remember is there are several factors that play into when the Bank of Canada is deciding what they will be doing. Will they be increasing or decreasing the rate? So they look at inflation, they look at the job market, and then they look at the GDP of Canada. Is it increasing, decreasing? So those things come into play, and this oil is a big factor for Canada. It is so we are an oil exporting nation, but then we're also a big consumer. When oil prices go up, those prices get passed on to businesses, and businesses pass those on to us, the consumer, and that's going to lead the overall price of everything else to increase. Okay. Otherwise, in terms of the other things that we've noticing, because you said your charts, your sales are down. Your sales are down, and your inventory is now flattening out. But there is a group
to be confirmed over the next couple of months.
Mm-hmm.
But yeah, like the total inventory is coming at a plateau right now.
Yeah. So there is this one group of buyers who are making the move. First-time home buyers.
Yes, sir.
Yeah. So these are the people who have the advantage of buying right now. And as I showed you in my previous chart, which I just closed, the interest rate, this is the perfect place for them to be in the marketplace, because you have prices that are dropping.
Mm-hmm.
You have properties that are sitting on the market, they're not moving.
Absolutely. I mean, I can
And
definitely.
you have interest rates that are at the lowest that they have been in the last 3 years.
Yeah, like the rate is not the issue. The inventory is not the issue. The price for some of those property is not an issue. Matter of fact, no later than yesterday, we identified a potential property for a friend who was a first-time home buyer, and we looked at it and said, okay, well, price works, the property is nice, let's go. I reach out to the agent and say, I have 2 offers on the table.
Yeah.
So we need to distinguish in that chart right here, in the total inventory right here, that among that inventory, we have properties that are, mispriced, properties that need renovation, properties that the strata is not ideal or problematic, or facing special levies. So, but there is a share of that inventory where the property presents very good characteristics, such as a view, such as a good layout, such as a good building, good amenities, low maintenance fee. And that particular property was downtown Vancouver, and the price per square foot was listed for $850 a square foot. And right now the average is at $1,000 a foot. So when you see those properties and everything is in line, combined with favorable lending condition, such as lower rate, because we don't know what the future is going to be when it comes to rates, cost of financing, yeah, it makes sense.
Yep. And those people who are making the moves, they know all this, so they're able to get in there. I've had clients who have looked at 30 to 40 properties before they make a decision, and when they do go in there, they know they have the leverage. They're negotiating on the price, and they're actually locking in on longer terms because of the fact that they're getting good rates. So I've had 3 buyers in succession who have made the moves, and they're taking 5-year fixed.
Okay.
Because they've seen what they've been on the sidelines for the last 3 years. They've been renters and they've seen the news. Oh, rates are up. This is up. This is that. So they are now looking for security. They see this as their chance to take that first step. So the people, what your chart also indicates is the flattening of the inventory, or what we think is
That's
going to be.
That's right here, the little
tick. So what that represents, it's the folks who want to move, who already own property and who are not able to move up at the moment, because in order for them to buy their next property, they have to sell their current property.
Okay, I can expand on that, because we have a problem. Okay.
And I think you're not going to say the same thing, but go ahead.
Yeah. Because the people that bought, usually if you follow like an increasing price since you bought, you, on top of making a profit on the price evolution, you also pay towards your equity. So you have more to do a move up. Okay, and that's kind of a logic path. Okay, like you buy a 1-bedroom, 2-bedroom, and then you move to a townhouse, duplex, detached, potentially. But now, because the market has been basically behaving in such a way that there's been a price decline, people that bought basically since 2022, they are not selling to buy bigger
because they can't.
So that wagon of potential movers is not there.
Yeah.
And it's not going to be there for quite some time.
It is. And here's the other factor. A lot of those people who purchased between 2021 and 2023, and if they purchase single family homes or anything that has a rental suite, their qualification and their property value increased because of the potential of rental income. As soon as there were like legal suites and laneway homes and rental income, because we had a lot of international students who were coming in and they were renting at that, and the rent, because of that, rent prices were high, and those kind of properties were desirable. Now we've had the opposite. Like we have all those people are gone.
Rental price decline.
Rental market has completely declined. You have tenants who when the renewal comes up, they can easily, walk away and go find themselves a much cheaper place because they now have the ability to negotiate. Before
Absolutely.
they didn't.
It's 15% on the rental price from the peak. Correction. So it took quite some time. But for instance, if you were paying a rent that you got into in 2020, for instance, and you were paying $3,000 a month, which is ultimately a normal rent in Vancouver, like right now, minus 15%, we're looking at $2,500.
Mm-hmm.
So investors are also gone from that conversation.
Exactly.
So those volumes here, I'm telling you, 2026 will be worse than 2025.
Yeah,
We
so
are
you have a double effect there. So now those rental properties are potentially sitting empty. There's no tenants there, and the value has dropped. So you would think the smart investor, if it's an investment property, if you're owning a condo, they are dumping the property as fast as possible. So if you're a first-time home buyer, you can get in there, you can negotiate, and you can get a great price on that property. For people who have purchased single-family homes with a laneway and a basement, they are in a tougher position because those properties, specifically if you're sitting in the city of Vancouver, you're looking at close to $2 million plus for a property like that.
at least. Actually, I can show you right here.
And $2 million is being generous on the lower end if you're on the east side of Vancouver, like somewhere.
I think for average home in Vancouver, we're looking at 2.4. West side,
Okay.
east side combined.
Yeah, that makes sense. A duplex now can cost up to $2 million, depending how they build it.
So I can tell you about it if you want.
Yeah.
So duplex. So here's the hard stat, okay, from personal research that I conducted. So on the east side, okay, and I'm going to pull that. Okay, median price per square foot. So that's on the resale, okay. Price per square foot, we're looking slightly above $1,000. So on the sold duplex on the east side, since the beginning of the year, the average price per square foot is about $1,100 a foot for a brand new duplex. So you need to add 5% GST on top of it, okay? And even if you add 5% GST, we're looking at $1,150-ish. So meaning the premium between the resale and the brand new, okay, and beautiful, okay, materials, newer, codes for, so
all the bells and whistles.
All the bells and whistles, including GST, $1,150, 15% premium from resale to brand new. That premium in the heydays of 2020, 2021, when we're talking about a Butterfly or Kangokuma, those high ends, where they were selling $2,500 a foot. Like, we're talking about premium of 100% and plus.
Yeah.
On a more standard pre-sale, not luxury ones, the premium was still 60%. Now we're talking 15% for duplex, meaning you stay away from the strata and the maintenance fee. So you improve your quality, right? Like this is
and you own land.
And technically on the strata, you own the land. It's just divided between all the different owners. And this, like if you have a 20 units tower or 120, you own the land at the same time, but you divide it a lot more. So you have a thin share, right? On a duplex, you share it with only one person.
Correct.
All right. And now with the wave of multiplex coming because of the SSMU, small scale multiple unit housing from the province, it was imposed to all the municipalities. Now you're going to be dividing that right to land by 4 to 6 different units. Okay. Correct. And the duplex is going to become a very high value item, in my opinion, for the years to come, because those SSMU are popping all over the place, no matter what. Right. So how did we get it talking to this? Yeah, so if you want to have like an average cost of a home, single detached, 2.4, okay,
Yeah.
in Vancouver. Pretty much, historically it's been 3 on the west side, 1.5 on the east side. Okay, that's pretty much the ballpark. Okay?
Yeah. So the way we got into this conversation was like a lot of those properties, if they were bought in the last 3 years, there was a heavy reliance on rental income to get qualified in the mortgage side of things.
Okay.
Now that the renters have gone away, so that rental value has gone down. Those folks are now carrying higher debt to income because now they have to make up for the difference for the tenant what he used to pay and what they're getting now in terms of mortgage and property values because the BC assessments just came in last month. Property value has dropped, and we talked about this in our last podcast, has dropped all across the board. So when it comes to these folks who would want to sell this property and move on, they're not able to do it unless they take a bigger loss. And that's what's keeping the market where it is. If that's why it's only the first time home buyers who are able to make the move. Folks who have a mortgage own a property right now, and if that equity has dropped significantly, it's much more difficult for them to move up. Because there's other factors. Unless their income has increased, unless they're being able to inherit more money that they could put towards a bigger jump, they're not able to do that. And the Canadian economy is struggling with because we still have outstanding issues with the United States that has not sorted, and I feel like for the remainder of the Trump years, it's not going to get sorted. So we're going to be right here for the next 3 years at least.
So right now, what I'm trying to tell our viewers is in Vancouver, so far, the way I understand it is we're in correction territory.
Mm-hmm.
Okay, in observing, witnessing price decline over the years from the peak in the range of 15%. So correction. Okay, if you look at year over year for price right here, benchmark price, so detached minus 8.8, condo 6.8, okay, townhouse 5.6%, okay, year over year. Okay, so right now, in my opinion, we are at the situation, or either we stay in the correction, or we might, depending on the conflict and the price of oil, go in crash. We might still, because right now, if we lose 1% month over month, at the end of the year, that's another 10%.
Mm-hmm.
Okay, so with the 15 that we've had, now we're talking more than 20%. So this is not a nice situation to be into, to be clear. When I first started to be in real estate as a realtor, I was in real estate, but not all the time as a realtor. I never, it's happy times. You know what I mean? You're buying this and that. And right now, we're helping people that are bleeding, and that is not good. You know what I mean? Like, it's not the thing. Like, it's not a pleasant job. You know what I mean? Like, it's I wish the best to everybody throughout the world. You know what I mean? No matter what, peace and love kind of approach. But right now, it's tough times, and if the conflict carries on in the Middle East, if not sorted out in a swiftly manner, people are going to feel it economically here, for sure.
Yeah.
For sure. And I don't want this to happen. So take it from there. But that's part of our podcast, to deliver the truth, to convey what we understand of the situation, and not sugarcoat things, right?
Yeah. we have to be upfront and honest, and we have to be realistic about it, and everything can't be, sunny and rosy all the time. But there is always some positive out of the negative. So what we would take away from this conversation is, if you were a renter for the last 3 to 5 years and you've been thinking about making a move, this is the right time for you to do it, because you have the trifecta of low price, high inventory, and low interest rates.
That's true.
So that is what we should take away from this conversation. The next Bank of Canada announcement is this month. It's coming up on March 18th. We will see what they decide, all these factors that we've mentioned. Will this conflict that's going on in the Middle East, how much further this will expand? Because we've got 13 days between today and the 18th. A lot more can change. This conflict can come to a quick close, or it'll freaking expand into war.
Everything flips overnight. Here.
So, yeah.
So maybe, in 10 days, everything will be sorted out. Maybe not. Like last week, like a week and a day ago, we're looking at a decrease of interest rate,
Yeah. Our expectation was, there was going to be at least one rate drop this year, and we were going to stay put. But now this changes everything. There is now potential for an increase on the 18th, but we'll wait till the announcement and see what they decide.
Hang on.
If you're a first-time home buyer, keep stacking up that down payment.
Yes, sir. That's a good way to. They're actually talking about that. You have a first-time home buyer saving account, investment account.
The FHSA, you mean?
FHSA, yeah.
Yeah, so it's a TFSA account, first a home savings account. So the deadline for that always closed on December 31st. So for that it's different. So for 2026, it's open. So you have between now and December 31st to contribute into your room. Every year you get $8,000. Same thing for RSPs. Now the room has opened for 2026 because we are past the first 60 days. And another update on the GST rebate, something that was announced by the new government last year. If you're buying a brand new property, if the contract was signed after May 27th, 2025, they announced the GST. However, it has just only cleared the Senate. It has to go to the Parliament to get royal, ascension. Only then it will go into, then it'll become law. Up until now, that still has not passed yet. So, please be prepared to pay that 5% GST when you make that purchase.
Okay, so let's close on a positive, happy note. If you were to combine the incentive and look at pre-sale, so pre-sale basically englobes a new property. Okay, so existing brand new property, okay, and you qualify for the GST rebate, and you're a first-time home buyer, and you qualify for the property transfer tax waiver, you can make and given that the premium that we just talked about between the resale and the new property price difference is very, very narrow now, you can score a nice property and benefit significant savings. And we're talking savings, for a property in the range of 1 million, it would be in the range of $50,000+ that you would have had to pay otherwise. Oh no, let's not use $1 million because the PTT waiver is up to $850. So if you're a first-time home buyer, you're buying a property at $700,000, you're saving yourself $50,000.
Yeah, because that's at least $35,000 in GST if you were purchasing $700K. And then the property transfer tax would have been somewhere around $12,000 to $16,000. So that puts puts you at about $50K. So that's significant savings.
And yeah,
and
so
and the drop in price, because if you would have bought this last year, the year before, you're paying whatever the high, the premium of the property plus these things. So you could have been potentially 150K higher than what you are right now.
true. So it's not a bad time to be a buyer.
It's a great time to be a buyer.
It's a better time to be a buyer than it has been for the last 10 years. That's for sure.
That's right.
All right, very good. Piyush, good to see you as always. Take
Same
care.
here.
Let's go for lunch.
Let's do it. Okay, take care, everybody.
Thank you. Bye-bye.